Introducing myself. My name is Isabelle Bibet-Kalinyak. I am both French and American, and I reside in the greater Cleveland area, and I'm a member of the French-American Chamber of Commerce who's helped putting this together. My profession is avocat, attorney, or lawyer in the US. There's no difference between the two. And I'm what we call a business attorney. In the United States, the role of attorney is different than in France because we do not have the profession of notaire. What you hear about notaries in the US is absolutely not the same as a notaire, so do not be mistaken. So the business attorneys have a greater role in the US as you set up business here and have various dealings, whether it's setting up your entity, negotiating contracts, or also buying property. The attorneys are pretty much everywhere in such transactions. So as a business attorney, I help clients from a little bit all over the place, although I specialize in healthcare because I started my career in plastics, working for an aerospace manufacturer called Schneller Inc. in Paris, and then transferred to their headquarters in a beautiful Kent, Ohio. I have 13 years of experience in the plastics industry, and it remains dear to my heart. And I love facilitating intercontinental deals and introducing French companies to the United States system. So my goal today is to give you a brief overview of how that works. It's definitely just an overview and just to give you a flavor and also introduce you to the vocabulary so that you start thinking about your future needs or what perhaps you should have thought about when you started here if you are already in the country. So Cedric, let's get started. So I'll first start, if you want to move the slide to go to slide 4, is how do we start a business in the United States? So there are some similarities between the French and the US system, but all the names are different. So if you try to just translate names, it's not gonna, and try to Google, it might lead you to some little catastrophes here. So Le Registre du Commerce is what we call the Secretary of State in the United States. And as its name indicates, it's present in each state. So it's a different body or entity in each different state. So you first have to think about, if you start a business, where do you start it? And then you register it with the Secretary of State. All that is done online now. And the key difference with the France is that it's very quick and very efficient and also very cheap. There's limited documentation to be provided usually, and it varies based on the type of legal entity you're trying to register, but it's very, very simple. So once you are registered with the Secretary of State, you must obtain a federal employer identification number. Everybody refers to your EIN number. And that's really for purpose of taxes. The IRS is the federal system for taxes in the US, and that's a must to start there. It's your employer identification, but it's not just for employee matters. It's really basically your ID number that tracks you for everything, including for opening bank accounts. No bank is going to open a business account without an EIN number. We are lucky today to have on our panel a banker specialized in commercial banking that will explain further into this, but it's very, very important to have your EIN number. The flip side of this for individuals is to have a social security number in the United States, and it's not at all the same purpose as le numéro de sécurité sociale in France. So they're basically identification number, one for employers and one for individuals. Then the next steps would be to decide if you need to register your entity in any foreign jurisdictions. And what do we mean by that? I'm not talking about foreign as overseas or in a different country. A foreign jurisdiction in the vocabulary here means just another state. So, for example, you could register your entity to do business in Delaware, and it would be a Delaware entity, and Delaware is one of our favorite states. But if you want to do business in Ohio, that's totally possible. You just need to register your Delaware entity as a foreign entity in Ohio. So again, the process, everything is done online now with limited paperwork, and it's very, very streamlined. I must say that during COVID-19, these processes actually, although they slowed down at the beginning, and all the states were having the same problems as employers with recruitment and having enough people on board, their systems were tested, and they are now also strengthened as a result of the COVID-19 process. The next steps involve various matters related to the type of business that you are into, especially if you're a manufacturer. The workers' compensation system is an insurance system in each of the states, almost each of the states, that provides insurance for injuries on the job. So it's state-based, and it's very important for manufacturers, but also for any entity that employs employees on the ground, because there are some rules guiding this. If you're employing, for example, salespeople or business development folks, they are on the clock and driving around. If they get into an accident while on the job, this all gonna go and be processed through the insurance of the workers' compensation in terms of medical claims. So it will not go through the standard medical insurance that we have, and that's another difference that in the United States, the insurance system for healthcare is totally different. Then comes an array of permits, especially if you are a rubber plastic manufacturer, because of whether we're talking about emissions or there's just a number of licenses and permits for safety that you're going to have to file. Another thing to watch out for is that some states and for specific entities, you will have to file either annual reports or biannual reports. So watch out for these notices from the state telling you that you have X days to renew your entity. Otherwise, they might just cancel out your entity or put it in a dormant state, and you will have to pay some fines. And they're not huge, but you'll have to reinstate them to continue to do business and to pay your taxes and be a good citizen in that state. So that's just an overview about the different states to create the business. Cedric, if you want to advance to the next slide, thank you. But how do you choose the type of legal entity? There are very different types of businesses, and those are pretty standard across the states. And we'll mainly focus today on corporations and limited liability companies, because that's those that you're going to encounter most. The key considerations when you are choosing your legal entity is really how much risk and how much liability are you willing to accept, and how much risk are your partners willing to accept. And then other factors include, of course, the tax treatment, all sorts of legal issues, and as well as how you plan on managing the entity. So depending on how many owners or shareholders you have, all this gets more or less complicated. If this is more or less a small, not just a small business, but has a small number of owners, you would fall into what we call probably the closely held companies. And in each state, you could avail yourself on some special rules that allow yourself to be governed in slightly different manners so that you retain all the power and control of your entity. And but this is, again, state specific. So your attorney and your accountant here typically will explain to you the pros and the cons of choosing one type of legal entity versus the others. And sometimes there's just no perfect answer. You'll have to make some compromise. Sometimes also you may start one way, and as your needs mature and evolve, you may want to change the type of legal entity, or also add different entities to your portfolio to separate the risk. All this, it tends to be much easier than when you are in France, and the costs are also less than in France overall. The need for capitalization are far less than in France, and it's therefore much more permissive. One thing I want to clarify is what we call C corporations versus S corporations. These are not necessarily different types of corporations. They are different tax status. And our colleague from the accounting firm is going to explain this in greater details later, but this is something to keep in mind. Again, LLCs can be taxed as proprietorship, partnership, but also as an S corporation or a C corporation. So it gets complicated, and that's where we need to have good advice from both an accounting standpoint, an audit standpoint, and a legal standpoint come into play. So let's switch then and talk a little more about corporations, Cedric. Thank you.
Sounds good. I forgot to mention, but please, if you have any question, I'm putting it little note in the chat. You're welcome to, tell who you are, and if you have any question about the presentation that you've seen. Thank you.
Même si vous avez des questions en français, n'hésitez pas et on pourra les traduire. Merci. So let's go to the next slide and talk a little bit about corporations. This is just a brief overview to give you the basic vocabularies. All entities have different vocabulary if there are a different type. So in a corporation, the owners are called the shareholders. And when you register with the Secretary of State, you will basically register your articles of incorporation. Names change a little bit state to state, but that's pretty much it. And then the documents that will govern the rules of your corporation and how the owners interact with each other are typically called the bylaws. And then in some states like Ohio, you also have a code of regulations. For corporations that are more closely held, that have fewer owners, you may also have what we call a closed corporation agreement that basically takes over and supersedes some of the other documents. If the rules are not all spelled out in these documents, then we typically default to the state where the corporation is incorporated. And so it's important, if you want specific rules, that you spell them out in the beginning. And again, your advisors are going to be able to assist you with that. Whether you have a limited liability company or a corporation, the owners are shielded from liability. So their role is to provide the initial capital investment, but past that, their own wealth owned individually is typically protected from liability and is not imputed to the corporation. There are, of course, some exceptions. If you commingle personal business with real business of a corporation, based on longstanding case law as well as some of the rules, some people might be able to do what we call piercing the corporate veil to try to attack you as an individual, but that's rare, and but that does happen. Again, the C corporation is when the entity is taxable as itself, apart from its shareholders, whereas when you are talking about an S corporation from a tax standpoint, that's also what we call a flow-through entity. And we'll discuss that from a tax standpoint a little more. Now, to contrast with corporations, if we go to the next slide, we have the limited liability companies. Again, different vocabulary, but pretty much the same mechanics. So you are a member if you own into a limited liability company and not a shareholder, for example. So why pick a corporation versus a limited liability company? Limited liability companies tend to be a lower cost to administer, and there are also typically less rules at the state level governing them in terms of registration and annual filings with the Secretary of State. Again, this gets very technical, and it's best to leave and discuss that, of course, with from a tax standpoint and a business standpoint, so that you make the best choice. So today we have we're just doing a little overview of this, but if we go to the next slide, I would just want to touch briefly about the jurisdiction, where to incorporate or file your entity. There's for a long time, the state of Delaware, which is on the East Coast, has been king. But is Delaware really king today? Again, it's state by state, but it's also company by company. It really depends about your needs. So Delaware has been king because pretty much every lawyer in the United States knows, every corporate lawyer knows the rules of the Delaware. So a lot of companies start to incorporate in Delaware, but then might be doing business in a totally different state. So again, these foreign registrations depend on where you're doing business and how long you've been doing business for. If you're just sending, for example, a sales or business development person in Washington out west, but you're registered in Delaware, you might not need to do anything. However, if you're setting up a plant, or if that business development manager is located and you're employing him or her in the state of Washington, you will have normally to register in that state. To register, don't worry, you don't need to set up a plant or an office there necessarily yourself. You can use what we call a registered agent in that state that will pretty much receive your mail and forward it to you. Each state requires, if you're going to do business in that state and register in that state, that you have a registered agent. You can pay a company to have a PO box to do that for you, but make sure you're setting up something with a reputable company, because otherwise that could create some additional risk for you. Again, the US is a very different place for you. I'm going to shortly transition to my colleague Josh Riley who's going to talk about the banking system. But before going there, in the next slide, I just listed some important considerations from a human resources standpoint. Everything is different in the US in terms of employment. Do not assume pretty much anything transfers. And what seems similar is usually going to create traps for you. So some attorneys will specialize and be very specific about labor and employment matter, but pretty much there is less regulations in the United States, and the employers drive a lot more the benefits of the workforce than in France. In France, a lot of that is dictated by the state, it's by law that you get 5 weeks of paid vacation. We don't have that at all in the United States. Instead, each employer decides how many vacation days they give their force or not. Not all employees have vacation time and paid off. Same thing with healthcare insurance. So just rely on your advisors for that. So I think we're just giving you a brief overview. If following this presentation you have any questions, I have provided my contact information, my cell phone and my email are there, and I'll be glad to respond to any of them. Thank you, Cedric. Appreciate it.
Oh, thank you very much, Isabelle. Great presentation. I see you got more ready to go, and it's a great deck where, as you mentioned, you go over the definition. So thank you so much for sharing that with us this morning, Isabelle.
Thank you.
Josh, I'm gonna stop sharing that presentation. Do you want me to share yours, or do you want to do it? I think it would be best, right, if I share yours?
Yes, that'd be great if you could share mine.
Okay. Here, it's coming right over. I don't know if I don't think it's on screen quite yet. Here we go. Do you see it on screen?
Yep.
All right, Josh, the floor is yours.
Terrific. Thank you, Cedric. So a little bit about me. I've been working within the U.S. financial services industry for over 20 years. I've had the privilege of working for a diverse range of financial institutions that give me exposure to a variety of transactions, services, and financial products. Today, I'd like to cover, next slide, please, Mr. Cedric. The U.S. banking system, deposit accounts and account types, the Federal Deposit Insurance Corporation, some account opening guidelines, and then a really high level overview of lending, borrowing in the United States. Next slide, please. So as of 2019, the US banking system was comprised of 4,519 commercial banks, 5,133 credit unions, 494 mutual banks, and roughly 659 savings and loans or S&Ls, which is a lot of options for consumers. On this slide, we're going to go over a real brief definition of each so you get a feel for what each is. Retail commercial banks serve both consumers and businesses as customers. Some good examples in the Cleveland area would be your key banks, PNCs. First Merchants Bank is a commercial bank. These banks offer personal loans, mortgage loans to individuals, as well as basic and complex cash management services to businesses and consumers alike. Foreign exchange services are also available for those that do business abroad. Then the next tier we've got is investment banks, which help businesses raise capital when a company wants to go public or sell debt to investors. We have central banks, which manage the monetary system for the government. The Federal Reserve is the primary U.S. central bank. We have credit unions, which are nonprofit organizations owned by their customers, have similar services to retail banks. And we have online banks, which, as the name implies, they're solely online, no brick and mortar locations. We have mutual banks, very similar to credit unions, with the exception of the fact that they do business typically in a single community. And last but not least, we have savings and loans or S&Ls, which offer consumer services similar to retail, and their savings deposits help to drive their lending activities. Next slide, please. A little bit about us. So First Merchants Bank, we're a commercial bank, again, organized during the Panic of 1893. Over a 100-year timeline, the bank has grown to over $14 billion in assets. We're now the second largest financial services company in the state of Indiana. We're very proud to have made the Forbes list for the 4th year in a row as one of the top banks in the country. And with First Merchants Bank, we're headquartered in the Midwest, so we're deeply rooted Midwestern values. We collectively feel that the work we do can help grow businesses, strengthen communities, and improve lives. As a banking partner, it's critically important that we understand our customers and always strive to provide sound advice. Next slide, please. A little bit about our footprint. So our current footprint, retail footprint that is Michigan, Indiana, Illinois, and Ohio. We currently do business outside of these states, but that's our retail framework. If you had accounts with us and you need to access your funds in a different state outside of our footprint, we, along with the vast majority of the banking institutions out there, have multiple ways in which you can access your funds. Next slide, please. These include, but not limited to, online banking, which is the ability to access your funds via the internet, ATM or automated teller machines. So most banks will have a network which will provide a low or no cost fee structure. However, funds can typically be accessed through any ATM, a debit card or a check card. And this product is typically issued at account opening. These are issued so that way you can access funds within the account only. There's typically no charge for using these. These are not to be confused with a credit card, which is a credit-driven debt vehicle. Then we have foreign and domestic wire transfers, which is the ability to wire funds from your account either domestically to another account or internationally to another depository account. We have ACH, or automated clearinghouse services, and we're seeing a real uptick in this specific product due to the speed and security of it. Typically an ACH originated same day. If it's early enough, we'll hit the intended account on that same day prior to 5 o'clock. There's a lot of security protocol involved, and so we're seeing a real uptick in that utilization. And last but not least, remote deposit capture, which provides the customer the ability to make a check deposit from their desktop without actually having to visit a physical branch location. Next slide, please. Now we're going to cover the types of depository accounts, and I'll go over these briefly here. We have a checking account, which I think probably most people are very familiar with. And here in the United States, these allow for unlimited deposits, numerous withdrawals and transactions. They typically pay no or low interest rates. We have a savings account, which is an interest-bearing account. Those accounts will have some limitations as to how many times you can withdraw funds from the account. They're typically used for excess cash, emergency funds. Then we have a money market account, which is very similar to a depository account, or sorry, a savings account. The difference being is that they typically pay a higher rate of return. There are going to be some transaction limitations on a monthly basis, like a savings account. And last but not least, we have the certificate deposit, or the CD. These are conservative savings vehicles. They provide an interest rate premium in exchange for the customer agreeing to leave a lump sum deposit untouched for a predetermined period of time. All these accounts can be federally insured via the FDIC for up to $250,000 based on ownership. However, there are other ways to achieve a higher limit of insurance. Cedric, can you please hit the next slide? FDIC. So the Federal Deposit Insurance Corporation was established after the collapse of many American banks during the initial years of the Great Depression. The FDIC became a permanent government agency through the Banking Act of 1935. So it's an independent agency of the US government, and any person or entity can have FDIC insurance coverage in an insured bank. A person does not have to be a US citizen or resident to have his or her deposits insured by the FDIC. FDIC is backed by the full faith and credit of the United States government. And since the FDIC began its operations in 1934, no depositors ever lost a penny of FDIC insured deposits. So let's go over some of the account types the FDIC covers. So we have checking accounts, now accounts, savings accounts, money market accounts, time deposits such as CDs, and then your cashier's checks, money orders. Those are all covered. Items that the FDIC does not cover are typically going to be those items that you hold in a brokerage account or via private insurer. So some examples of those would be stock investments, bond investments, mutual funds, ETFs, again, any of your private life insurance accounts, so life insurance policies, annuities, any municipal securities you may own, safe deposit boxes or their contents, and lastly, U.S. Treasuries. Next slide, please. The standard deposit insurance, as I mentioned before, is $250,000 per insured bank for each of the following account ownership categories. And here's just a list of some of these types. We've got single accounts, joint accounts, corporate partnership or unincorporated association accounts, employee benefit plan accounts, etc. The FDIC insures deposits that a person holds in one insured bank separately from any deposits that the person owns in another separately chartered insured bank. However, funds deposited in separate branches of the same insured bank are not separately insured. So if we look at this, the FDIC provides separate insurance coverage for funds depositors may have in different categories of legal ownership as well. So the FDIC refers to these categories as ownership categories. And so if we get the next slide, please. Real quick, before we dive into the account opening guidelines, I'll give you an example of FDIC insurance in ways in which you can increase it. So because the FDIC provides up to $250,000 of insurance per account, an account with a joint ownership or joint account ownership designation could provide up to $500,000. So in the event you own this account with another individual, you can then increase your FDIC insurance from $250,000 to $500,000. Another example would be if you had a payable on death account. So in that specific situation, you could achieve up to $250,000 in insurance per beneficiary. So if you had a payable on death account and you had, let's say, 4 beneficiaries, you could achieve up to $1 million in FDIC insurance coverage. Next, I'm going to cover some account opening guidelines, and this is basically just the checklist for all the items that a banking institution would be looking for in the event you'd like to establish an account with that banking institution. So, as Isabelle had mentioned previously, tax identification number, EIN, Secretary of State registration, an established physical location, telephone number, website, an idea of monthly recurring revenue, and then the vendor's business clients ultimately that you'll be doing business with. You're going to see kind of a similar list for the individuals who are ultimately signers on this account. They're looking for valid personal identifications. That could be driver's license, passport, and then a secondary form of ID. So they'd be looking for credit card, birth certificate, social security card if applicable. In some instances, we've been taking library cards. And then, of course, it's just your contact information. So home address, telephone number, email, job title, etc. Next slide, please.
Josh, may I add something here?
Yes.
All these seem very, very basic, but in real life, when you try, now that we're all going to online banking, when you're talking about the telephone numbers, for example, for account verification and all the security processes that are attached to your account, dealing with French numbers versus American phone numbers can be a challenge. And that's when you want to deal with banking advisors that have experience in that space and can work with you to debug this, because otherwise you might be stuck outside of your account. So this has happened in the past. And so just don't assume it's that simple, but it's all for protecting your account in the end.
Well said. Thank you, Isabelle. And you're spot on there. In some of those instances, especially if we're looking at the two-factor identification, we've had individuals that set up intermediaries here in the United States. So attorneys, great law firms, accounting firms that help them with the establishment of the account, and in some instances act as a POA. So that's been one angle. Another way that we've helped to kind of circumvent that, so ultimately that two-factor identification isn't all that difficult, as they've established numbers here in the United States. So well said, and thanks for bringing that up. Next slide. Thank you. I'm gonna do a very high level overview of lending and other services, and this is primarily retail commercial banks. But what you're going to find is that most of the retail commercial banks here in the United States will offer consumer personal loans. They could be secured loans or unsecured loans. Typically, if we're not talking about a mortgage loan, you're looking at a duration or a term of 12 to 60 months, depending what that end purpose is. Could be for cars, could be for debt consolidation, etc. There are unsecured loans. Those typically, the product that comes to mind is the personal credit line. That's a credit bureau driven kind of product. They're looking at your financial capacity for repayment. So ultimately looking at tax returns or some form of verification of income. And that could also include employment information from your existing employer. Then we've got mortgages. Mortgages here in the United States, there are two types that typically see would be your ARM or adjustable rate mortgage, which would ultimately have a fixed rate for a period of time, and then would go to either a floating or relock. And then we have your standard fixed rate mortgages, which would be fixed for the entire term or duration of that note. We talk about business loans. This specific section is really geared more towards companies that are headquartered abroad. Typically, you're going to find appetite via retail commercial banks for those companies in the middle market or corporate size entities. So those companies that are 25 million plus in revenues, funding secured by assets domiciled here in the United States. Interest rates would vary in the range of the 10-year Treasury index plus, I threw a range out there, 175 to 500. So you'd be looking at somewhere around low 3s to 6s, let's call it, depending on what ultimately the collateral is, duration, etc. And then ideally, there's a U.S. headquartered accounting intermediary like Plante Moran involved with that. Private wealth services, something you're going to find that most commercial retail banks will offer as well. And that's retirement planning services for individuals and companies and personal investment services. Next slide, please. So First Merchants Bank is looking to expand our customer base in the plastics, rubber, and composite industries. We've got quite a portfolio in distribution, manufacturing. I'm looking to continue, in some cases, begin those conversations with companies headquartered both domestically and abroad. Next slide, please. Listed here is my contact information in the event you have any questions about establishing a banking relationship here in the United States, or you'd like for us to review existing incumbent banking information. We're more than happy to help. Cell number and email address is included.
Wonderful. Thank you so much, Josh.
Thank you.
I like that you keep it compact and but also you hit all the important points. And as mentioned, it's nice to know that, you know, especially the people from overseas can call you and you can help them you can guide them through that process, which sound basic, but you know, when you're not located in the same country, it can be a little bit of a challenge, but I know it's why you're here. So thank you so much.
Thank you.
I'm going to stop sharing the presentation and we're going to switch to Robert. Robert, do you want to share your own presentation or how do you
Cedric, I sent you the PDF. So if you go into your email while I do kind of a brief introduction, you can pull it up and you can run it. It's a simple 6 slides. So
okay, so sounds good. I do that. Go ahead.
And good morning, everyone. At least good morning here from Cleveland. It's, I believe, afternoon if you're in France. And my name is Robert Shenton, and I am a CPA with the accounting and tax and wealth management firm of Plante Moran. 32 years with the firm, work extensively in the manufacturing and distribution industry, which includes certainly the industries that we've targeted for this presentation, especially in plastics. And while our firm, Plante Moran, is based here in the Midwest, we work in all 50 states of the United States, as well as having offices in India, China, Japan, and also a big presence in Europe as well. And so pleased to be here this morning and to share some thoughts with you on accounting and US tax issues. As you've heard from the legal side and the banking side, this is kind of the third piece of one of your major considerations for doing business in the United States. So we'll go to the second slide, please. First, we're going to start with here, what are the different accounting positions in firms that need to be a consideration of doing business in the United States? And there's really a couple different levels here, or titles, that we talk about in terms of accounting positions. The accountant or bookkeeper are people that generally handle your day-to-day or monthly activities of recording transactions and things that flow through your accounting system. A controller is somebody who's usually a little higher level, will have some higher compensation, but the controller usually is able to do more than just bookkeeping. The controller is able to usually analyze financial statements, spot trends, and basically help you with managing the business and the activities that are going on within your entity. The next level up is a chief financial officer, or a CFO. And a CFO generally takes everything that we've talked about in terms of understanding accounting and tax and analytics, but also would typically be able to provide strategy issues and really help your overall growth strategies and things that you're doing within the United States. And, you know, in essence, in all three of these positions right now, there's two ways an organization can look at handling this. One is that they can be employees of the company, and so basically paid for and on the payroll of the company, or there are a number of companies that help to provide outsourced accounting services, controller services, and chief financial officer services. And so those are really kind of the considerations for how to make sure that you're appropriately accounting for your financial activity, but also being able to look forward and manage for growth or things that you're doing as an organization. Transitioning to accounting firms in the United States also provide accounting, tax, audit, and consulting services. And I think in the consideration of doing business in the United States for French companies, it's really important that you work with an accounting firm that understands both domestic US and international business, accounting, financial reporting, and tax issues. And so Plante Moran is one of those firms. We do an extensive amount of international work, both inbound as well as outbound, as far as investment goes. And again, it would be important that you work with a firm that understands those international issues. Next slide, please. So as Isabella talked a little bit about structure, corporate structure in legal entities, I'm going to focus some on the tax side of things. And when we start with US C corporations, the tax rate that's associated with income on corporations is currently 21%. Now, there is pending legislation that would change, we'll say, tax rates and such, and that is part of a large discussion here in the United States, and it's likely tax rates will change in 2022, increasing, but as it is right now, the corporate tax rate is 21%. And that there may be some withholding tax that applies to dividends on foreign shareholders that, depending on your situation, you'll need to be aware of with regards to US C corporations. The next group that we'll talk about is limited liability companies, or LLCs. And for federal income tax purposes, generally they're treated as disregarded or as a partnership if there are two or more owners. And so in other words, what we talk about is flow through income, and that you don't pay tax at the LLC level. Typically it flows through in terms of being able to flow through to the owners of that limited liability company. However, there is an option of what we call to check the box. And that check the box is treated as a corporate taxpayer if that's the route that you choose. Next level is partnerships. And so when we talk about US partnerships, they do not pay federal income tax on profits. In other words, it flows through, and the partners of the entity are liable for the income tax at their statutory rate, meaning whatever the partners' individual rates are. There are some complex rules for United States partnerships with foreign partners. And so that's something that we have to be aware of in terms of setting up and doing business in the US in terms of what foreign partners have as far as reporting requirements in the United States. So federal income tax, is relatively straightforward, and where some of the dynamics come into play that create more complexity is in the state and local income tax arena. And state taxes are going to vary from state to state. There are some states in the United States that have a 0% rate. In other states, it can go up to as high as a 12% rate with regards to tax. Now, again, the complexity of state tax situations is that it's important to understand what the varying levels are in each state that you might consider doing business in. And the states have become very aggressive about trying to pursue revenue sources from companies doing business, where it used to be a factor of, do you have people there or payroll? Do you have equipment? And now, given there's so much, we'll say, service activity that doesn't require people and or equipment, states have become very active about trying to pursue revenue off of gross receipts. In fact, in Ohio, we have what's called the commercial activity tax. And it's a very simple tax to fill out, but basically it gets at a gross receipts tax in terms of what you have paid to the state of Ohio. Local taxes are things that drill down one more level from the state. And local taxes, the state of Ohio does have a local tax system for many cities. Generally, those are going to range anywhere from 0% to 3% in terms of the state and local tax impact. Next slide, please. So next level of taxes, and this is, I think, important once again to understand what area you're working in and what your good or service is in terms of the United States, but is sales and use tax. Now starting, there's something what we call a VAT, or value added tax. And the United States does not impose a federal value added tax on goods and services. So what's commonly known as a GST. But when we take a look at state sales taxes, they're going to vary certainly from state to state. And in some states, it varies what we would call by county to county. but that rate can be anywhere from 0% to 7.25%. And the sales tax is the liability of the purchaser that must be collected and then remitted by the seller. So purchaser pays the sales tax, but the seller is the one that's responsible for remitting to the taxing authority. And these sales and use taxes, they have their own registration process, their own reporting requirements. And once again, it's part of working with your bank, working with your legal team and your accounting team to make sure that you satisfy those sales and use tax requirements. And then we go to withholding tax. Withholding tax is in addition to what the corporate income tax is. And every payment from a US person to a foreign person needs to be looked at and understood as for withholding tax requirements. And the US tax is really only imposed on certain US source income. So it's important to understand the source of your revenue and the source of the income. And that the statutory withholding rate on payments of interest, dividends, royalties, rent is at a required rate of 30%. So it's a significant rate when you look at what that withholding tax is at. But the US income tax treaties often offer the ability to reduce those withholding taxes. So once again, this gets into some complex regulations and rules, but understanding how to use the treaties is important in terms of reducing that withholding tax liability. And then the other couple of taxes here is payroll. Certainly, there are many payroll companies that work here in the United States, and we typically recommend that companies try not to do payroll on their own here, and that they do work with a payroll company, because the penalties for non-compliance with payroll can be pretty steep, and the payroll companies have the expertise to be able to handle all your state and local withholding requirements. And then, as mentioned, the commercial activities tax here in the state of Ohio is based on gross receipts. And so it really doesn't matter if you're making money, meaning are you profitable? It's taxed at the receipt level or at the top line or revenue level. Next slide, please. So when we talk about what are the types of tax returns that are filed, and I think this will cover really at a high level, but when we talk about C corporations, the form number is a form 1120. And those tax returns are due on the 15th day of the 4th month after year end. So April 15th for those that have a December 31st year end. So April 15th is kind of a celebration day for us in the audit and tax world. It means that in most situations that we've got things filed. However, if they're not ready to be filed, there's a 6-month extension that's available. And there's a requirement for quarterly estimated payments that you make on the what you expect to be the income. There's also what we would call safe harbor provisions for organizations as well. But again, that Form 1120 is the C corporation tax return. For partnerships, it's a Form 1065. And this would also include limited liability companies that are taxed as partnerships. And these are due on the 15th day of the 3rd month. So March 15th is when the partnership returns are due. And those also have a 6-month extension available. State tax returns are going to vary from state to state, but generally they're going to follow the same pattern as what we'll say the C corporations, the partnerships, and the LLC. The extensions are available. Usually it's a 6-month extension, and quarterly payments, estimated payments are generally things that are required in terms of looking at. And then your sales tax registrations and returns, generally those are going to be monthly, quarterly, or annually, depending on the state rules and regulations and the level of sales that you have within the entity or state. Last slide, please. So a couple other things just to be aware of is that, there are a number of credits and incentives that are available within the US federal system, and those can be research and development credits. Section 179 relates to depreciation rules with regards to equipment and machinery and such, and bonus depreciation. So right now, with the system that's in place, to the extent you have investments in machinery and equipment, you have the ability to deduct those, the depreciation on those pretty aggressively in the initial year of purchase. and thereby helping to reduce your taxable income. Now, there are some interest deduction limitations, which is Code Section 163J. We won't get into talking about code sections today and such, but there's also foreign tax credits to be aware of, transfer pricing. If we're talking about real property, there's some special rules that relate to the ownership and disposal of those real properties. There's also the global intangible low taxed income and foreign derived intangible income. And the last comment I'll make here is in terms of Plante Moran, Team Neo, and Jobs Ohio, is that we are an investor, meaning Plante Moran in Jobs Ohio. We're an investor in Team Neo in Northeast Ohio. We're an investor in Central Ohio and Columbus with One Columbus. And the economic development that takes place through these organizations is important. And it's another source of credits and incentives to be aware of if you're looking to bring business here to the state of Ohio. They're very knowledgeable, and these credits are lucrative generally when we talk about how to navigate that system. And we're a big fan and big proponent of working with the economic development folks at Jobs Ohio and Team Neo. So with that, I will pause and we can go to next.